Welcome into the rotation. I'm here with Patrick Ryder and George Kursar. We usually try to talk about current events of the day in cannabis, and we can certainly do that again this week, as there's always news out there for us to mine. But I think this week we're going to focus on one thing and one thing only, because of our guest and what he brings to the table. As any of you that follow the marijuana cannabis sector know, safe banking has been thrown out. That term has been thrown out in more articles than one would like to mention, but it's never been passed. It's reached through one house. It's been tucked into bills. It's been kind of treated as just like this floating bill that can be whipped around. I could say many different sayings. I don't think any of them would be appropriate, but main focus here today is going to be safe banking. We have a gentleman on today. His name's Ian Stewart. He works with Ian works with Wilson Elser in Los Angeles, a large firm that is bringing real talent to the space in cannabis. Ian has been on the forefront of everything cannabis since 2010. He'll say 2014, but we think it's earlier than that. He really took a liking to it, really brought some talent to the space. Anything you want to add this week, Patrick?
I'd like to add that, in honor of March Madness and spring break and all the things, I think this is going to be a fun episode. Very interesting. We've known Ian for a long time, and we're going to talk about a Safe Banking Act that has honestly, it's just been on the bubble. And so we are on bubble watch again. And in this season of March Madness, I think it's more than appropriate that we enjoy this interview with Ian Stewart.
Awesome. Good afternoon, good morning, good evening. Welcome back into the rotation. This week, thrilled to be joined by Ian Stewart from Wilson Elser in Los Angeles. Ian is a treasure trove of information in the cannabis industry, and we're thrilled to have him on here today. We sat down with Ian last week in New York and had a great conversation, and we wanted to bring that to you. Ian, before we get into the meat and potatoes of the conversation, why don't you give us your background and how you ended up being one of the foremost experts in cannabis law?
Well, that's kind of you, Brian. And hi, Patrick. Great to be with you guys today. So my journey in cannabis, excuse me, started accidentally. It wasn't intentional. I wish I had a great origin story with finding the plant or that kind of thing. And I don't. It was an accident, but it was a really happy accident. I've been an attorney now for almost 30 years. I've been with the firm for 22 years at Wilson Elser. And I moved to California from Chicago back in 2007. And at that time, we were still, in sort of the proto market for medical marijuana in California. In 2010 is when I first attempted to join, to do something with cannabis. And it was through the London insurance market at the time. So there were several syndicates. And for those of you who aren't aware, the London syndicates tend to take on evolving risks, large risks. They do a lot of reinsurance and excess insurance for unusual or evolving risks around the world. So cannabis was one of those. And so I started to educate myself and attempted to educate some London brokers in London through the London market, but my firm wouldn't allow it at the time. It was just reputationally too risky. This was back in 2010. So I dabbled a little bit here and there, and then it was really 2014 when things started to take off, and we started to see some additional carriers look at the market. We saw the London market exit suddenly in the middle of 2015. They made a decision because of federal illegality that as a matter of policy, all the London syndicates pulled out mid-year, which caused quite a bit of havoc, as you guys may remember. And that really opened the way for some of our other, existing and new clients to enter. And that's when we decided to form a team here in 2015 and started focusing in California and slowly evolved over the next number of years across the country. And so, my background is I'm a litigator. I do product liability risk management, IP, data privacy. couple other areas. But with cannabis, it's really just been a learning curve on the regulatory aspect and the insurance risk management, financial institution analysis, et cetera. So it's been a really fun journey.
And I'd just like to qualify for everyone. We are not going to talk about insurance with Ian. That's not what we're going to do. So stay tuned. This is going to warm up here. Ian, can you give us a little background on the firm, just so people can get an idea of this, the scale and the type of professional services that are being brought to the cannabis industry?
Sure. So Wilson Elzer is an AmLaw 200 firm, and we have 42 offices across the country and in London, about 900 lawyers, full service firm, and numerous practice teams. So my job really with the cannabis team is to act like a quarterback, right? So if a matter comes in and I can handle it, I feel comfortable handling it, I will. But otherwise, I seek support from our attorneys across the country.
So what you're saying here is this is not my cousin Vinny's shop. This is a little bit different experience when you're talking about corporate law.
It's a larger firm.
Yeah, 100%.
Ian, there's been some recent happenings in the banking world. I know we're going to get into safe banking, but really the big announcement was the SPAC deal with Safe Harbor Bank. One of the big things that we're wondering, or one thing I'm wondering, is do you think that bank, along with other banks, will stay listed on the NASDAQ and NYSE as is?
Well, so I was really interested to see the news about Safe Harbor, and by the way, I really respect that institution. I think that it's been fantastic for the cannabis industry, and kudos to them for creating and to Cindy Sinfried for having the gumption to grow a real true compliance program, which is what's needed, and to do it in a cost-effective way, because the biggest problem has been the banks can't seem to get a handle between the cost issues and around due diligence and how they charge their clients. And so with that predicate, I will say the SPAC, it was a little bit of a head scratcher for me because it just seems like, and maybe I'm missing something, but it just seems risky to me that we're on the verge of safe banking or some other broader federal legalization. Maybe it'll happen this year, maybe not. We can talk about that. But I mean, I don't think anybody doubts that it's going to happen in the foreseeable future. And then the question is, does that due diligence model survive when you've got, the provisions of safe banking and all that it entails? It sort of moots the kind of, raison d'etre for Safe Harbor Bank.
But what we've seen, when we look at companies, like there's a couple of BDCs that have been listed on the NASDAQ lately, and those are lending institutions that are providing funds through the debt markets to cannabis companies. And, one of the things that one of the caveats that the SEC placed on them is that they're not allowed to take on warrants or any equity positions as part of their lending portfolio. Do you see anything coming from either the SEC or the NASDAQ going into this SPAC that would send up a red flag for the combination to go forward, or was this kind of pre-vetted through those two regulatory bodies to make sure that it can be successful? Yeah,
that's a great question. I would certainly hope, excuse me, that they would be speaking with regulators to get some idea of how the regulators would treat a listing. What we don't have yet is a clear idea of what FinCEN, that's the Financial Crimes Enforcement Network under Treasury, which enforces anti-money laundering laws through a statute called the Bank Secrecy Act. We don't know what FinCEN is going to do in terms of its, new guidance that will come along with safe banking. So I think it's probably helpful to explain what safe banking does and doesn't do, because, it's a fairly short bill. I don't know, for those of you who haven't read the bill, it's only 15 pages or something. In the scheme of things, it's not very long. And I just jotted down a couple notes, and basically what the bill does is it does create a legal safe harbor, so it would prevent punitive action or adverse action taken by banking regulators against financial institutions. And so financial institutions include depository institutions like banks and credit unions, of course, insurance companies, or other companies that take money in trust for others, right? But what it does is it it prevents federal forfeiture merely because you're banking, marijuana risks that are state legal. It prevents terminating insurance, a deposit insurance for those accounts, and it prohibits offering, prohibits a regulator from saying, hey, you can't offer certain financial services. So loans, all the suite of commercial services that should be available to other markets should be available. So that's all good news. But what it doesn't do is it doesn't expand legality that would be impacted by cannabis's Schedule I status to other areas. And one of those is the publicly traded indexes. So there is nothing in safe banking right now in terms of the letter of the bill that would say, yeah, you can uplist, you can take a Canadian, an American cannabis company that's traded on the Canadian exchanges and uplist here to the New York Stock Exchange or the NASDAQ, or do an IPO for a new entrant to one of those exchanges. There's nothing in here that says you can or can't do that. So the devil is going to be in the details of the FinCEN guidelines once safe banking is passed. And I don't think I've heard really much from the regulators or from FinCEN as to what they may or may not do. I think that there's a lot of pressure that will be brought to bear on Wall Street to allow that to happen. And I think there's an expectation that it will happen. So I'm optimistic in terms of safe harbors situation with what it can or can't do upon the listing. I think it's a trailblazer. So we're gonna have to wait and see.
She continues to be a trailblazer. Go ahead, Brian.
Yeah, no doubt. And I listened to a 12-minute interview. She's very impressive. Let's back up for a second. You and I have talked in the past a little bit about how banks and credit unions right now are able to take cannabis money. There's certain hurdles they have to jump through. Can you jump into that? I certainly can't remember, and you do. So please explain on that if you can.
Sure. So I mentioned the Bank Secrecy Act. That's the key federal statute. The Bank Secrecy Act, the purpose of that act is to provide a vehicle for the federal government to police and punish financial institutions that assist with money laundering. Okay. And then the definition of money laundering is another area that I think people who are really interested in the area should understand what it is and what it isn't. So there's a suite of federal anti-money laundering laws that describe different kinds of money laundering and how it's defined. But we don't need to get into that right now. But the idea is that you've got the Bank Secrecy Act that sits over these other federal statutes. It polices financial institutions. And the federal agency is FinCEN that polices that. In terms of obligations, so in 2014, same time as the Cole memo, Treasury announced, basically companion guidelines to the Cole memo, which were premised on the Cole memo's guidelines or those factors, saying that for financial institutions that would like to bank or service the cannabis industry, we're not saying it's legal, but here's some guidelines that may make it less risky, right? So it was guidelines, but not a safe harbor. And it had two major requirements. One was a requirement to file what's called suspicious activity reports, or SARs. Treasury made it easier to some extent by creating what's called a marijuana limited SAR, which is an online filing. Each one doesn't take that long to do, but you have to do it, for each transaction, and for banks, that is a heavy lift, to be able to do that. And the other area is a due diligence obligation, and that's very similar to other due diligence obligations within the anti-money laundering statutes, and it's called AML, due diligence and anti-money laundering. And basically, it's know your customer, right? Who are you dealing with? Do you know who the owners are? Do you know what their channels of trade are? Do you know who their business partners are? Are they licensed? So that you have, if a regulator comes knocking, you've got a file and you can say, yeah, we've asked these questions, we've got these answers, we've done some due diligence. We're not just servicing, any old person that comes knocking on the door. Where that due diligence crosses over from being acceptable to unacceptable for a federal regulator is still a little bit up in the air. I mean, we really haven't seen very many prosecutions of financial institutions where and in fact, we've seen none where the sole allegation is that they're servicing the legal cannabis market, right? There has been some prosecutions of financial institutions that service cannabis industries, but there's always some other predicate, some other legal violation or alleged legal violation that is sort of the impetus for the action. So we don't have a lot of clarity, frankly, from the federal agencies in terms of those due diligence obligations and what's where is the line drawn where it crosses over into inadequate due diligence.
So I wanted to kind of then circle back after we talked about that and go back to the Safe Banking Act. 15 pages, not a lot in it. What do you think needs to be added? What do you?
Well, I think that so whenever we have a statute like safe banking, I think that there's always a little bit of a give and take in Washington. You don't want to make it too chock full of detail and too onerous, because you need to have the support. You need to have people who can read it and understand it and legislate on it without it being too controversial. On the other hand, then you have questions. So I think what we have here is a situation where, let's say it passes as is, okay? And it's already been passed 6 times by the House, as we know. So it could easily be passed by the Senate. It's just a matter of getting a vote. And I think it's convincing, certain Democratic senators to allow implemental legalization like safe banking without broad legalization, including the various social justice issues, which are important. But, there's a healthy discussion right now as to what's the right move, implemental versus full legalization. But let's say it passes as is. Then what part of the bill directs FinCEN to revise the guidelines, right? And so we're going to have a more fleshed out version of what's allowed after passage. Okay, just like any other statute. So I mean, look at the cannabis regulations in almost any state. You've got the actual regulations that pass, and then you've got the rulemaking that surrounds it, right? And you've got the public comment periods and all the stuff that what does this mean? What does that mean? That's if you compare law to a body, the safe banking bill is like the skeleton, right? And then you've got the rules and regulations around it. That's like the muscle and tissue. And then, eventually it gets to the courts, and the judge-made laws like the skin and everything else, right? So, then you got a full body of law, right? And right now we're just at the skeleton.
I wanted to ask Ian about some of the impacts here. And obviously the low-hanging fruit is to say, let's get the cash out of the streets, right? Let's get cash out of the streets. Let's use financial institutions for that. But safe banking does more than just promote public safety. When we start looking at, the 755 to 800 banks that are currently providing services to the cannabis industry, they're doing so and creating profit for themselves. And I think one of the things that we always talk about is 280E, where does safe banking fall into that? Is there a push coming out of that to say, okay, well, now that Wells Fargo is going to be lending to, MedMen, for example, are they going to be putting pressure to reverse 280E so that margins become better, et cetera, et cetera? And like banks right now are charging an astronomical rate to take on cannabis deposits, something that's probably 2 to 3x of what you would see on commercial loans. Can you talk a little bit about the financial impacts for the cannabis companies that they would see a benefit from coming out of safe banking as opposed to where we are today?
Well, look, I mean, I think 280E, for someone trying to vocalize a rational basis for 280E at this point in time is very difficult, especially after safe banking. If we're going to say, hey, listen, notwithstanding Schedule 1 status, we're going to allow all this other stuff, all this activity, but we're going to punish those who engage in state legal actions for what amounts they can deduct on their taxes based on kind of a broad, because 280E is a cudgel, right, in the tax code. It's not a scalpel. It punishes everything that would be illegal, and it makes no sense at all. I think everybody understands that, but it's responsible for bringing in a lot of money, right? So it's one of those things where it'll come. In terms of other benefits to cannabis companies from safe banking, I mean, there's a whole bunch of them other than just having access to a safer place to store your money and commercial loans and all the lending and all that stuff that will be great. But what it'll do is it'll hopefully break what we've seen is there's a sort of vicious cycle that happens with cannabis companies, especially ones that are trying to grow or break into new markets, where you've got how do you raise money? You raise money through private money, investors and so forth. And it's good that we've had the level of funding, private funding that we've seen, but there are pressures that come with that, right? So you've got, these guys are not giving you money out of the goodness of their hearts. They want to see a return. And so therefore you've got companies that have a decision to make. Do they strictly comply with every regulation, or do they grow and make a profit, right? And sometimes it's as simple as that. And sometimes companies have made the decision for the latter, and they're going to seek the profits over compliance. And that has rebounded on a number of companies that we've seen in the news. And attracting talent to boards of directors so that we can make better corporate governance and business judgment decisions, on boards and as officers and managers. I think that safe banking is going to allow all sorts of things. It's going to allow, directors and officers insurance for one thing, to track those people to come in, and to kind of disrupt this vicious cycle where we see companies saying, okay, we can't grow because we don't have enough cash. Our investors are demanding a profit. They're not going to give us anything else until we show that profit. We're going to make these very risky decisions. We don't have the adequate cover for it. Things go bad and it spirals out of control. That whole thing that I just described will hopefully be stopped dead in its tracks with safe banking.
You talked a little, we kind of went around in circles on it, but how does the NASDAQ, TSX, NYSE, do we think safe banking gives them a go-ahead to let these companies list? And when I mean companies list, I'm talking plant touching, not, the ancillary companies are already listing. Just curious of your thoughts on that.
I think it's likely, but again, it's not in the bill. I think there's a strong expectation on Wall Street that will happen, but it's going to be in the regs, not unless they amend the bill to add additional language. It'll come afterwards.
And this goes back to the point around safe banking creating benefit to the cannabis companies. And Brian, I'm going to ask you the question: what is the benefit of getting off of the CSE and trading on the NASDAQ or the New York Stock Exchange, as opposed to either the CSE or some of the ancillary markets where we see companies trading in Canada right now?
Access to capital is the biggest benefit, I would say.
Institutional capital too.
Institutional capital, you'll have more insurance capacity. These companies are really starved for insurance, and not just the lines that we work on, but there are $200 million buildings that are being, that just don't have the capacity they need to cover themselves. So it's going to allow the cannabis discussion to move forward. I think that's another great benefit of it. But mainly, you're seeing everybody have to pinch their pennies, right? Because the capital is so hard to come by in this market. Once safe banking comes, they can get large swaths and be able to raise money on a U.S. exchange. It's a different beast, and everybody will tell you that, from the CSE to the NASDAQ, right? Or NYSE or whatever have you. So that's what I would say.
Yeah, and so people get an understanding of this. When we talk about access to capital, there's a lot of private money that's out there, right? There's an awful lot of private money, either come from private equity, family offices, some traditional sources of funding for many enterprises. But that money is pretty expensive as it relates to, in comparison to a small business loan or something like that. Can you talk a little bit?
Yeah.
Yeah. If you're a let's just compare it to other market, right?
Yep.
If you're a company that's opening up a tire shop, you're not getting a bunch of private investment to open that and grow it. I mean, maybe if you've got a strong family network or something, but that's through commercial loans, right? In almost every case. And cannabis is just one of these odd creatures which has grown up in reverse of what normally happens. What normally happens is you've got a small company that gets a commercial loan and it grows. It's got a great product and it proves itself first. And then they say, hey, we're going to do like a Series A, you want in before we do a, eventual IPO. And that's where you get the private money, right? Cannabis is totally, the reverse of all that.
Yeah. And one thing I would add on that is I think safe banking, another big benefit would be for people like Michael Diaz Rivera, the gentleman we had on here in episode 2, what Ian just spoke of, a commercial loan to start his delivery business, or to have a little kitty to kind of, get a couple cars, put some paint on those cars that show his name. Those sorts of things aren't going to happen for social equity licensees unless they have private funding, right? So to have banks like Safe Harbor who could then start doing that lending would help them immensely. So
Absolutely. Yeah, and I don't want to be too harsh on Safe Harbor, because again, I mean, it's helped my clients, and it plays a critical role. I just do wonder what the long-term strategy of the SPAC is, post in a post safe banking or post legalization world.
Yeah.
Well, I mean, honestly, I think it's expansion. Right now, you've got these, credit unions and companies like Safe Harbor that have geographical constraints on what they can do with lending money. And so I think, a SPAC where they get a decent pipe of $200-300 million, and they could put down an institution in California, they could put down one in Massachusetts, even absent of safe banking, I think is a good thing. So I do think that the SPAC is interesting. I'm going to be following that. But anytime somebody that has been as committed to the cannabis industry as the folks at Safe Harbor have been, can move the ball forward by doing something like combining with a SPAC and listing on the NASDAQ, I think that's a great thing. Yeah. And so regardless of what comes with it, it certainly furthers the conversation.
Yeah. Ian, I think we're running up against it here. I just want to say thank you. I know that we talked a little bit more in New York about possible health concerns of cannabis, and I would love to have you come back on. We didn't really get time to do that today, but Patrick and I are going to read the extensive studies you sent us. I actually can't wait, because I've been trying to read as much as I can on all sides of the cannabis health. But really just want to say thank you, taking your time. I know it's early in LA. Really can't say thank you enough. So, Patrick, if you have anything else you want to add, please feel free.
Again, Ian, we mentioned this at the outset. Wilson Elser is a massive firm, and the support that you guys have shown to the cannabis industry has been extraordinary. You and your partners there have kind of been the face of the legal front for the cannabis industry for a long time, and we really appreciate that. We've partnered on some stuff, and we'll continue to work together going forward. But thank you for the time this morning and just the dedication. Really appreciate it.
Hey guys, thanks so much for the opportunity, and it's been a pleasure.
All right, talk soon.
All right, guys, that was Ian Stewart from Wilson Elser, giving us a lot of great content around safe banking and some of the ins and outs of the regulatory environment that those of us that are involved in the industry on a day-to-day basis see as both struggles and opportunities. We're really excited. That's 5 in the can, everybody. Top 5 at 5. We're good to go. So everybody enjoy March Madness, enjoy St. Patrick's Day, have a wonderful week. And we're going to take a little breather here to pack it back up and see what happens next. So until we meet again, Brian.
Yeah, I just wanted to, take the first 5, digest them. Let us know what you think. Subscribe, like. We'll be back. We got some great things coming up. More guests like Ian, more guests like Michael. We're going to cover the whole spectrum of the cannabis industry, like we said. And as a weekly reminder, 77,000 ounces of smokable flowers sold in Florida last week. So certainly on our way. Thank you for listening, and we'll see you next time in the rotation.
Grab the spray, George.